So welcome back, guys. We have a couple things to discuss. I also want to let you know that I also started a $25,000 challenge on Robinhood, and the point of the challenge is to grow the account to 100K and see how I will be performing that. Mostly, the portfolio right now is just small caps, since I think that small caps are really undervalued right now. But besides that, we're going to be talking about why the market's falling, why it seems like to some of us that are invested in small caps, why it seems like we're taking really large hits, though we really are not, because if you look at SPY's only down. In a month, it's down about 2%, and it was up about almost 2% just this month. So if so far, I think if anything, I think we're down about a five. I think we're down about three. Let's look over the 3 month. Yeah, if anything, we're down about 4%. I don't think we have a 5% correction yet. Unless you count yesterday, where the stock it did go down about 2%. So you could say this is a 5% fall. I don't think that's a correction that we need, because as of now, according to Robinhood, which I doubt is even actually correct, because we know how Robinhood is, the P ratio is still 29. And I think it was actually 25 on a more accurate source. So if anything, I say that the P ratio is down about 2, 3. I'd say not more than 3 points. But the big thing of why why the market is falling is due to Evergrande. Essentially, you can think of it as one of the largest companies there. If not, it might be the largest. I really haven't quite looked into that, but it was a large cap company. Think of it as of like AT&T. AT&T is a very, very large company. The market cap is in the almost half a trillion, if not half a trillion already. And we all know how AT&T has large amounts of debt. Essentially, with this company, so far, what we're seeing is that they had large amounts of debt, and due to some recent changes, of course, COVID, and then some also, as well as China and their laws, how they like to control everything, and imposing different things and different tactics to do whatever it is they're trying to do. Who even knows? Evergrande, which is of course a large part of the economy, has actually there's a lot of speculation, or probably could already have been happening, but since it's China, we don't really get a lot of information for it, that they could actually be, declaring bankruptcy, or let's say, just failing in general, and that would be a very large problem, because Evergrande. Yep. So Evergrande actually has a very a market cap of 38 billion. I think it's pronounced Hong, which is the currency in China, which translate. I even forgot the number. And in general, they have over 120,000 employees, and they are the largest company, the second largest real estate company in China. So this is a massive deal. Look, pull it up here to get some more information. And of course, this is the current stock. The stock is currently down 50%. And the fear is that, with Evergrande's collapse, of course, if one economy, is doing well, that is doing bad, that could possibly affect our economy, because we're all kind of essentially on the same boat. If you consider that boat Earth, we are technically on that boat. So that is causing a lot of worry, and you can see that SPY is having some effect on it. However, today is bouncing back very hard. But currently, as of 8:25 a.m. here, September 21st, the Dow is up almost more than 0.5%, as well as the SPY and Nasdaq. I'm not sure if the Russell 2000 is. Yep, the Russell 2000 is close up to 1%. And my plan, or at least what I'm buying as of right now, I really only have three positions that I really am confident on, and that is just Bark, SoFi, and Corsair Gaming. Which that was a shout out to Jeremy right there, because I did see that he showed me the stock, did some more research on it. I did like it. So I'm now a shareholder, and I probably will be holding for a long time. So all of these are, you can say, long term swings. If not, you can call them investments, because I'm not really planning on leaving either one with a loss. So if I do have to hold for 2-4 years, that isn't an issue. And I also have some options that I put on SoFi and Corsair Gaming. Bark options are have a large spread on Bark, so I'm kind of waiting for. I'm not sure what I'm waiting for. If anything, I might just leave it like that, because I think Bark, I really have a good cost basis with Bark of 788, and this company is just stupidly undervalued, even if you compare it to its latest competitors. And I don't think I will be going anywhere on that. And all these stocks, if they drop, of course I'm going to keep buying more. That's what I was doing yesterday, and I'll keep buying. And well, as of right now, I did start a $15,000 transfer. However, this is the money that's in here. Is the money that's quickly available. So there's still 5K left, and there's currently 6K available to buy things. And I'm planning on leaving some of that cash in case of any pullbacks or anything, because I don't want to be fully invested in something. But as I was saying, right now, small caps I think are really the best deal. Because I don't really think, I mean, they can't possibly go to zero. I mean, these companies are worth something, and since February, if you look at any of these stocks, you get any of these stocks here, most are all small caps. Let's look at 5 years, because it's been so long since February 2021, or January, what are we going to call it, January the end. It's been going nothing but down, and that's a rare, and that's a case right here with a lot of stocks, even SOAC. You know what? They're actually not showing that on that chart. BBIG was probably one of them. Here you see a large move. Oh wait, that's 2020. Let's go back to February. Yep, there you go. You see that stock went from December, went to $3 almost on nothing. And though that's not a big compared to what it's going now, it was just showing you that a lot of these stocks were just going up and up and up and up, for literally no reason. Besides the fact that I guess people were just buying them and trying to short squeeze them, including, I mean, even this, though this is a much better company, which I'm planning on buying, was literally what it was at $50 in February, and then it went all the way down to 16. Of course, it had a nice bounce back up to 40, and now a lot more price targets are coming out, and the company's STEM, which is a very good company, and I should add some to my portfolio today, if not tomorrow. But the case in point comes with this is that a lot of these small caps are being unnecessarily punished, and I mean, of course, we don't know how long it will last. But I'm loading up right now to sell them, of course, at a much higher price. I mean, I'm doing the opposite. You're doing the opposite of what the market is doing. Well, it's essentially what makes you money. If everybody's scared, you buy more. If everybody's greedy, you sell some. And that's just how the markets always work. If that's that trading psychology, you could follow the herd, or you could go against the herd, and that herd will eventually come to you. And that's what I'm doing with these small caps. I'm adding while the price is low, because if you look at any of these, if you look at SoFi in general, was almost, you could say, almost $30. Hit a high of 25.78. Could have been a little bit higher than that. Let's see if I can find how much it hit. So it looks like Roman has not showing it to me. It's wonderful. Anyway, it hit a high of 25. I'm sure maybe it hit a little bit higher than that. And then it went down, bounced at 15, back to 20, 23. And now it's trading around the 14, 15 range, holding that sincerely well. As we are waiting bank charter approval in the company has applied to become a bank. So hopefully that does come through. I mean, I believe it will. I think they do have all the requirements, and they already kind of act as if they were a bank. So hopefully that goes well, as as I expected to. And Bark is also another one. Bank is another one on December 21st, went to literally $18. Currently sitting at $7 today. And I understand that this is it's not a car company. It's not a technology company. It is a pet. It's essentially a pet company or a dog company that would actually with a great business model and actually really high growth. Compare that to Chewy, which is a stock that literally has been on a tear since its IPO of 2019. As you can see, that's when the crash came in through right here in March, and the stock hit a high of, in February it hit $118. So even right now it trades at a much higher premium than Bark does. Although Bark actually it's growing more faster. It's a smaller part of the. It's the competitor. So you call it the underdog. That's actually that actually has tremendous revenue growth, and actually great subscription revenue. If I had to get this company could become profitable by, I would say less than 3 years. I mean less than 4. I would say less than 5 years. I think this company will become profitable. Of course, right now they're expanding, so you want to spend all your money on expanding before you actually start monetizing and increasing the prices of the things that you have. But Barbox is a great example of how undervalued that is compared relative to all the other stocks. As well as Corsair Gaming. Corsair Gaming is one that is trading at a very cheap PE when the company's actually doing really well with its earnings. It's not negative. It's not losing large amounts of money, and it's actually posting decent, if not great, pretty good growth of 24%. So you can see back in November it hit about $51. February it took a nice jump again, and then try to go for that high, but it didn't. And then since then it's been on a slow downtrend, trying to bounce off slowly. I do have a higher cost basis than I like, but that's fine. I'm planning on holding this one for a long time. If anything, just look at the forward PE ratio. The forward PE ratios are just the PE ratios, and you can see what I see in the company relatively compared to the S&P 500. The SPY is trading almost at a 25, if not 27 PE ratio. Well, of course, your gaming is trading on 15, 17. That's a large difference for a company like this, especially again, we're talking about a gaming company that produces PC, which the gaming industry has large amounts of growth ahead. Not even just now, but just ahead. And then the fact that the last conference call they released about like 73 new products. This is very good. I mean, if you wanted more information about it, Jeremy has a whole large amounts of videos that he could explain everything with it. However, I'm in it for now, and I'm probably going to be in it for a very long time. I've been in this position for I think about 15 days. If you look at, I don't know why I ended up selling something here. I don't know. I think I was rebalancing August 30th. And I really don't know, why did I sell here? I think I was trying to rebalance something. Yeah, I was trying to rebalance something, and then since there was nothing going on, I think I just sold for a minute. And then a couple of days later, I waited for a transfer. I'm not sure what the heck I was doing. Either way, luckily the price didn't move too far from that, so I was able to just buy in. And as of now, I'm currently adding. Yesterday I added the options, and I'm going to continue to add until it passes, I think, the 31 price, I think it is. Yeah, if we can get above 30, if we can get above that 30, because it's been trading around that range for a long time, that might be where I stop adding, just because it's finally broke that resistance. But as of now, I think I'm gonna continue adding little by shares. Bark, I may continue to add. I like that I'm only paying $7 for a company like Bark. SoFi, I think I'm done adding to this one, and the next one that I'm looking to add, or I haven't decided if I might add it yet. It's actually STEM, which remember this was one that I played a while ago. I played this one quite a while ago on April 30th, and it was an insane play. I was just buying. I was buying. Let's see if you see here. I bought it, and then I sold it, and then I bought again. $20,000, 800 shares at 25, and then the second day I bought another 12K at 25. Then I kept buying about 5 shares at 23. And it looks like I sold a little bit of it again. I don't know why I kept selling in and out of this one. Let's see, May 4th. This isn't actually, this isn't actually how this should be at all. Hold on. Let's take a couple. Oh, it doesn't work that way. Yeah, there's something wrong with this because that's not even close to what actually happened. Let's go to December. And we should find the actual things that happened with this one, because the STEM was actually one of my biggest winners that literally doubled my portfolio in a bit of a second. So it looks like Robin is only showing me a certain history. And I have played this one before. I probably should have I'm glad I sold. I didn't get to sell at the top, but I'm glad I did, and now it's kind of giving us a chance again to enter, which is which is just great. And that's why I'm considering, because the company's actually, I think it would be a killer long-term position if Northern Genesis. All right, I see what's happening. It was trading under a different name. That's the issue. The company traded under a whole different name, and it was Star Peak Energy. Now look at that. That might have been SoFi. If I could only find this. You know what? Forget it. Couldn't find it. Anyway, I just want to let you guys know that there's a new 25K challenge out there. And what I'm buying. So if you guys have any questions, please leave them in the comments. Any concerns or any help with anything, you can always use the email. Thank you guys for watching, and you have a wonderful day.